Most property investors with 4 or 5 properties look incredibly successful on paper. They have $4 or $5 million in net worth, multiple properties, everything looks great. But in real life, they are broke. Not technically broke, but cash flow broke. The salary goes entirely into keeping their portfolios alive. They look successful on Instagram, but behind the scenes, they're choosing the cheapest flights, eating McDonald's instead of going out for dinner dates, looking for coupon deals, saying no to holidays, and there's always this one thought in back of the mind: what happens if I lose my job? Because the truth is, their salary is feeding their entire portfolio. If the salary disappears, everything starts collapsing. And this isn't random. This is how most people are taught to invest in property in Australia. Buy negatively geared properties, hold them for 20 to 30 years, wait for capital growth, and retire wealthy. Sounds good on paper, but here's the problem. This strategy makes you asset rich, but lifestyle poor. Your properties grow, but your life shrinks. Your salary becomes the oxygen keeping you alive. So people sacrifice their 30s, their 40s, and sometimes even their 50s just to enjoy life after 60. But by the time they get there, they're dealing with health issues, diabetes, blood pressure, and whatever chronic diseases that you might have. And now they finally have the money, but not the capacity to enjoy it. Now add another layer to this. AI is about to reshape entire industries. Jobs that feel secure today might not exist in 5 years. So the real risk is not property, the real risk is portfolio that cannot survive without you. If your income is the foundation and your income is at risk, your entire strategy is sitting on a fault line. But there's a better way to build a property portfolio. A way where properties pay for themselves. I call these self-sustaining properties, which simply means the property covers its mortgage, its expenses, its management, its maintenance without you putting money in. And this changes everything because now your salary is no longer feeding your portfolio. The portfolio is feeding itself. Banks like you more. Your borrowing power improves. You can scale faster. And most importantly, you remove financial stress. So how do we actually do this? It comes down to one core idea: multi-income streams from a single property. Instead of one tenant, you design the property to support multiple tenants. This could be dual occupancy, duplex, dual key, co-living, rooming houses, a house with granny, anything, a house with self-contained studio, anything that can have you multiple tenants. So now you're combining high growth locations with multiple income design, which gives you cash flow and capital growth, not one or the other. Let me show you what this actually looks like in real life. So this is a dual key or dual income strategy. So what we do is we source a land where we could do some sort of dual occupancy, and the house from the outside will look like a normal family home, just like this. And inside we have a smart little creative floor plan where we have 2 little dwellings. So you can see this is dwelling 1. It's a bedroom 1, 2, 3, living, kitchen, and a bit of al fresco backyard and its own garage. This is dwelling 2, garage 2, 2 bedrooms, and little living, dining, and a little bit of backyard. And we have something similar we could do in Queensland. So 3-bedroom dwelling, and then this side is a 2-bedroom dwelling. So that's called dual income or dual key strategy that we tend to build new in areas that support such kind of properties. Next is house with granny strategy. So this is something that every Australian knows. This has been there in our ecosystem for over 100 years now. So you can see this is basically a main dwelling at the front, and there's going to be a little granny flat at the back. So you can see the main dwelling floor plan and a granny flat floor plan. So this is a very good way to improve your yield as well. Next is a co-living strategy. So we acquire land where we could build a compliant 1B rooming house. So what this means is every little bedroom will have its own little bathroom. So you can see bed 1 bathroom, bed 2 its bathroom, bed 3 bathroom, bed 4 bathroom, bed 5 bathroom, the kitchen, the living and dining, and everyone gets his own little pantries. So this is more like 5 different tenants can live in the house. So this is a very good way to improve your cash flow, almost double your cash flow without overcapitalizing. So it may cost you, let's say, 60, 80 grand more than a normal house, but your returns, your yield can magnify significantly. Next strategy is multi-income strategy. So we can source something similar where there's a residence in the front, there's a granny flat at the back, and also there's a little studio as well. So rather than 2 income, we have income. So that's a very good way to improve your yield as well. And this is another example where we have this main dwelling at the front. So you can see This is the main living dining, and then it's got little 4 bedrooms. And there's a back unit which has a bedroom and a living and a kitchen as well. And there's a lower ground floor where it's got its kitchen and a bedroom and toilet too. So you have like 3 accommodation within one house. So without overcapitalizing too much, you're unlocking your yield almost double. This is one of my very good strategies as well. Now, this is another multi-income configuration. So on the ground floor, you can see you have this garage and little dwelling here. And when you use the stairs upstairs, there's a little unit at the upstairs. Also, there's a bit of void, and there's another unit this side as well. And this house has 2 different entries at the front and entry at the back. So it's got a little staircase going up to this unit. It's got a little staircase going up to this unit. So it's very nice floor plan that could achieve like 8% plus yield without overcapitalizing. So you still do these in high growth areas, but your yield is almost double. Next is the duplex strategy. So this strategy, you can build identical little house next to each other. You can subdivide, or you sell separately, or you can hold separately, or you can subdivide and hold and extract equity to move on. Different ways to benefit from this strategy. So this is basically identical looking house next to each other. So you can see there's a 3-bedroom and a 3-bedroom house. So you can subdivide, or you can keep it as is and just whatever you need to. So very flexible strategy as well. This is a very good way to improve your yield too. So we obviously use these self-sustaining floor plans. We build or acquire in high growth areas, and that's how self-sustaining plus high growth properties are acquired or built. So that is a very good way to magnify your returns, magnify your net worth building, and scaling your portfolio. Now here's the real advantage. When your portfolio is self-sustaining, you're no longer trapped. You could lose your job, take off time, change careers, even start a business, because your properties are no longer liabilities. They're assets that work without you. If you're building a property portfolio today, just don't focus on capital growth, focus on freedom. Because the best portfolio is not the one that looks good on paper, it's the one that lets you live today well.